Show your problems out the door, and ain't no worries when you let loose.
Hello you guys, welcome back to my channel. This is Suheidi, the Business Latina. Welcome you one more time as we sit down together and talk about different types of businesses. As I promised to you guys in my first video, that I was going to share with you certain tips and my experience in this journey of how I have started my businesses and what has helped me. So one of the first things that I first targeted and was trying to get information about was what type of business I wanted to, structure. How did I want to structure my business, basically? So I did my research, and the one that I thought that would be most beneficial for me would be the LLC. So I also have the names of the other types of businesses, which I would like to share with you guys. I'm not going to get into detail of every type of business structure, but I want to mention them and mention a few details about each so that later on you can go and do your own research and choose the one that would benefit your company. Every company is different. Every company has a different type of vision, mission. Some companies are profits, some are not for profits. So it all depends, what type of business you have. So based off of the information I'm going to provide you today, and I'm going to share the link in the description box so you can actually go back to the same source, at least one of the sources that I've used. I'm going to share it with you, okay? Because I am not making this up. I'm not a tax professional. I'm not a CPA. So this is just information I'm providing to you that I use to help myself and that other business owners themselves have also used to make their choice of how they want to structure their business. Okay? So, awesome. So, there are 5 common types of business structures. Okay? They have some advantages that we want to know about so that you can choose the one that would benefit you the most. Okay? So, one of the first steps in order for you to establish a business is choose a type of business structure that you will use. Okay? This decision will impact several important components of your business. For example, such as taxes, okay, and personal liability. Those are some of the components that you want to consider when you're choosing a type of business structure. Okay, so there are some structures that are more popular than others, but again, it's your business, so you decide how you want to structure your business. So a business structure basically is a legal representation of an organization. Okay, it's how you are going to choose to represent your business legally. Okay, it defines who owns a business and how the business distributes its profits. Okay, so you'll need to have a business structure in place before registering your business with your local, state or federal governments, your local Secretary of State. Choose carefully because changing to a different business structure later can be restrictive and costly. So don't make this decision, very fast. Think about it, pray on it, discuss with your partners, with your spouse, whoever is going to be with you in this business, or if it's just yourself, still think about it. Don't rush. Okay, it's better to start good on the, on the positive side and on the right foot than starting on the wrong foot, and then you have to restructure your business, spend more money, and it's just time consuming, and you don't want to go through all the frustration. Okay, so people like me are giving you this information so that who also are business owners, so that you can receive it, analyze it, and then make your good decision. Okay, so a type of structure you choose can affect several factors. Okay, first we mentioned liability and taxes, but we have day-to-day operations. Okay, depending what type of structure you choose can affect your day-to-day operations. It can affect how much you pay in taxes, the amount of required paperwork. Okay, each structure requires different amounts and types of paperwork. The risk of personal liability. Will you be responsible for the debt of the company, or is that separate from your personal debt? Okay, and the ability to raise capital funds. Each structure gives you each structure is different. So depending what type of structure you have is how you're going to be able to have or have the ability to be able to raise funds. Okay, so that's very, very important. So the five common types of business structures. Number one is sole proprietorship. That's very common out there. Okay. A sole proprietorship structure is one person who owns a business and runs its operations. It is the most common business structure because it is the simplest to set up. Okay, if you plan to work alone, this may be the structure for you. So many of us have started as sole proprietorships, and that's okay. It's a good start because you get your foot in the business world, you start getting your name out there and things like that. Okay, so what are some of the advantages of the sole proprietorship? It includes complete control. All right, that's a good thing. 2, it's an easier startup. Okay, if you don't have the money and all this stuff right now to be able to invest in registering in another type of way, then you can start up as a sole proprietorship. It's simple tax reporting. Okay, and there's privacy. So sole proprietorships do not require filing annual reports with state or federal governments. Therefore, the business will not be subject to public disclosure, unlike other structure types. Okay, so that's your sole proprietorship is the easiest business setup, and you have all the advantages that I just mentioned. All right. Then we have the partnership. A partnership business structure of 2 or more people owned and they operate the business. Okay, these are 2 types of partnerships. You have general partnerships and you have limited partnerships. Okay, so what are some of the partnership structures include? It's a simple startup. Okay, few tax forms, shared finances, and combined knowledge. So, if you want to expand faster, if you want to get results sooner, if you want to, partner up with somebody to do a business, it's awesome. But you guys also need to really look into that about how the liability is going to touch both of you. If one of you is not able to do their part correctly on running the business and the debt that involves the business, then how is that going to affect each and every one of you? You share the finances. Is an easy startup. It's less tax forms. Okay, and when you have 2 people to working together as partners in a business, it can help grow your business because you're both providing skills and expertise in areas where the other is not familiar with. So it also brings another perspective for decisions about how to run the business or other important issues. So if you think that one's for you, then go right ahead, look into it, and find out with your Secretary of State how much it'll cost you and what you need to do to properly structure your business as a partnership. Okay? Then we have number 3, corporation. A corporation, it's a company considered as an entity that is independent of its owners. This makes it more complex and expensive than most other business structures since it must comply with more regulations, record keeping, and tax requirements. You may want to choose a corporation structure, also known as a C Corp, if you have an already established medium or high risk business, need to raise funds, have plans to take the company public, or sell it. Okay, so as we mentioned, it can be a little bit more complex to have a corporation. It can be a little bit more expensive than other business structures since it must comply with more regulations, record keeping, and tax requirements. All right, so look into that if that's what you're wanting to do. So what are the advantages of a C Corp? Number 1, it does have liability protection. Owners are not held responsible for a corporation's debts. So personal assets such as your car, your house, and savings, they are protected. So that's a good thing about having a C Corp or a corporation. Okay, as an independent entity, a corporation can file and receive lawsuits, but you're not personally liable for such legal action. So you are protected. Your assets are protected, and you are protected against lawsuits and things like this. Okay. It has continuity of business. Corporations base ownership on the percentage of stock held. So the business can run without disruption even if a shareholder leaves or sells their shares. So your business is guaranteed to continue to function. Okay, it will continue. This allows for more flexibility in transferring ownership. Okay, then you have quick capital. This is another advantage. Corporations can raise funds by selling company stock and offering shares as employee benefits. This in return helps grow the business and support it in times of need. So, having a corporation, one of the benefits is that you can get capital quickly if you need extra funding by doing what they just mentioned. They can raise funds by selling company stock and offering shares as employee benefits. Okay, like I said, I can't go into those specifically, points specifically because that is not my area of expertise. But registering for a business of this type and having legal assistance and guidance can definitely help you understand in deeper terms or in simple terms what this means. Okay, and then you have the last advantage of a corporation is tax exemptions. Though owners may pay a double tax on business earnings, corporations can deduct certain benefits provided to employees such as retirement plans, health insurance premiums, life insurance, and other related expenses. So there's benefits and tax exemptions and tax deductions at the end of the year that can actually help these types of corporations. Okay, so there are different types of corporations. It's not just C Corp and S Corp. You have benefit B corporations, okay? You have closed corporations, you have open corporation, and you have non-for-profit corporations. Again, I am going to link this same resource, this source, okay, to the description box so you can go back later and really study it and look into it, okay? So we have an S corporation. An S corporation is a business structure that has the liability protection of a corporation along with added tax benefits, making it more appealing to small business. However, it must meet specific IRS criteria to be listed as an S Corp. This structure, also known as S Corp, has two limitations. It cannot have more than 100 shareholders, and its shareholders must be United States citizens. S corporations can only sell common stock, which lets shareholders elect the board of directors and vote on company policies. Okay? So, again, becoming an S corporation requires meeting eligibility requirements, having a single class of stock, and having 100 or fewer stockholders. What are some of those advantages of structuring your business as an S corporation? Number one, no double taxation. Business profits and losses pass directly to the shareholders' personal incomes and appear on their tax returns. This means the S corporation only has one level of federal tax to pay and shareholders not subject to corporate tax rates. Okay? Then you have liability protection. Shareholders and S corporations are not held personally responsible for the business's debts and liabilities. This lets them protect their personal assets, such as bank accounts or property, from creditors. Then you have the other advantages, simple ownership transfers. So it'll be simple to transfer your ownership to another shareholder. Okay? And then you have cash method of accounting. While a corporation must use the accrual method, S corporations without inventory can use the more simple cash method. So again, look into this later on about the cash method of accounting, and you can ask for a professional to really break this down for you, so that if you do decide to structure your business as an S corp, you know exactly what these advantages are, and so that you can take benefit of them, but also understand them clearly so it doesn't backfire on you at the end of the year, or if a problem rises in your business, how are you going to handle this issue? Okay, So then we have limited liability company, which is the structure that I decided to choose for my company. And I, as I continue to build my other businesses, I am going to also have to decide how I'm going to structure those businesses. But for now, I am an LLC. And what's an LLC? Basically, is a hybrid business structure that lets you take advantage of aspects of partnerships and corporations. To set up an LLC, you must file paperwork with the Secretary of State of the state in which you plan to do business. And in some states, you can get your business structured in one day. Some states, you have to wait a couple weeks, a few days. So each state is totally different, okay? Just so that you know. This structure works well if you have a medium or high risk business, want to protect your personal assets, or pay a lower tax rate than you would with a corporation. So your personal assets and all your personal, things that have to do with, liability, you don't have to be concerned that you will have to take over the business assets. It won't affect your personal assets, okay, if there's something going on wrong with your business. Hope that made sense. What are some of the advantages of the LLC? It is a limited liability. Okay, LLC is an independent entity. You are not personally responsible for debts or lawsuits, as I tried to explain earlier, filed against the company. Okay, debts or lawsuits, you are not responsible for those if any of those are held against the company. If the business goes bankrupt, your personal assets will be protected, though you may lose the money invested into the business. A second advantage is it's called pass-through taxation. Rather than paying corporate taxes, the company's income and expenses pass directly to the owner's personal tax returns. They will then pay income tax on the profits. Since the owners are considered self-employed, they may claim the self-employed tax credit. So basically, it's going to be your responsibility as an LLC to contribute to your Medicare and Social Security during tax season. So you're going to have to make sure that that is, you're going to have to put into that. You're going to have to pay into your Medicare and Social Security, because as an LLC, you are not able to, it's not deducted automatically like another business structure would that has W-2 employees or things like that. Another advantage is added shareholder participation. An LLC can have an unlimited number of shareholders, and those shareholders can fully participate in the company's operation, etc. So, it's like a hybrid. It can run as a corporation as much as it can run as an LLC. It has its benefits, its partnerships, and it's pretty cool. It's got flexibility. So if this is something that you're interested in, then definitely look more into it. And the last advantage of an LLC would be flexible distribution of profits. Unlike a corporation, an LLC does not need to dispense its profits to shareholders based on the number and type of shares they hold. Instead, owners can decide how to divide profits. For example, a shareholder who contributed significant funding during the startup process could receive more profits even if they have equal shares as another participant. So again, there's flexibility on how they're going to distribute their profits as shareholders of the company. So thank you so much for taking this time to really, really sit down and hear this so you can learn it and then apply. So in order for you to choose the right business structure, here are some 6 factors to consider when you are choosing that structure. Think about control. Are you going to be the one in control? Is it going to be a group of people in control? Is it going to be a partnership in control? Think about those things. How do you want the control to be exercised in your business? Number 2, capital investments, okay? Depending what type of structure you have is how you're going to be able to acquire funding. So an LLC can have a little bit of difficulty raising funds but it's not always necessary for the owner to use their personal assets or credit versus a corporation. They can source their own funding, such as invest with investors and bank loans by selling stocks and things like that. So an LLC, can get their own funding. It's going to be a process of building your credit, business credit, if you don't have that credit already built, versus a corporation. It has more funding flexibility. However, you're the one to choose, right? Then you have number 3, the flexibility. Think about the flexibility of the structure that you're going to choose. Review your goals and business plan, then compare how each structure aligns with your plans. The structure should support growth and change and not limit its potential. So if your structure is going to help you grow and support that growth, okay, and the change that you want to produce through your company, then think about flexibility, okay? Another thing is complexity. Sole proprietorships is the simplest business structure, but it can also be hard to find outside funding. Partnerships requires signed agreements for roles and profits. Corporations and LLCs must report to state and federal governments. So how complex is it going to be? I don't know. For you, it all depends which structure you pick, okay? We just mentioned that partnerships require a certain type of agreement. So proprietors are the simplest way to structure the business, but not always easy to find funding, etc. Think about how complex your structure business is going to be. And then we have liability, number 5. Determine how much personal liability you want to carry. It's very important. Think about the liability. Do you want to carry some liability? Do you want to carry zero liability? It all depends which structure you choose. And then you have number 6, taxes. Each structure handles taxes differently. Okay? So think about the taxes as well, how that is going to be brought about at the end of the year. If you want it to be complex or if you want it to be simple, do you want it to merge to your personal tax returns? Things like that. So guys, again, control. Think about capital investment. Think about the flexibility. Think about the how complex it's going to be. Think about the liability and the taxes. So I hope this is useful for you. It was for me, and I am happy that I got to share this with you guys. And if you have any questions, or if you want me to give you more input on any of these points, I can, as I'll try the best that I can, because this is not my area of expertise. But feel free to reach out to me at my email. You can just access my email through my business website, and I would gladly assist you and help you with anything that you may need help with. So you guys have a blessed day, and I'll talk to you guys in my next video.